Okay, Fatin, over to you.
All right, so inshallah we will begin our event with Kitab Al-Fatiha. Amin ya Rabbal Alamin. All right, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to our beloved Ms. Khairunisa Muhammad Khairuddin, Director of Registry and Student Services, our dear speaker today, Datin Noor Shahalina binti Jamaludin, Remiser JF Apex Securities Berhad, the management of INSEF, and our fellow participants. My name is Fatin Shafiqah, Treasurer of Student Representative Council at INSEF, and I'd like to welcome all to our first session of the investment workshop series, Advanced Stage. All right, so for today, this session will, with the topic trading plan, aims to discuss about having a trading plan, money management, position sizing, and more. So without further ado, I'll pass the mic over to you, Datin.
Okay. Assalamualaikum. And hi everyone. Thank you, Fatin. Thank you, INSEF, for giving me this opportunity to share my experiences in the stock market. Hi everyone. I'm Noor Shahalina Jamaludin, and I'll be your speaker for today's investment workshop webinar. I'm really happy to be involved in this investment workshop that really combines the best of both worlds, education and experience. Today, we'll be going over a trading plan that includes money management, position sizing, candlesticks, trend lines, support and resistance, and lastly, how to enter and exit a trade. We look at all that in a chart at the end of the session to have a better understanding. Okay, we'll start now. Hanif. Okay, for those first time here, thank you for joining us. This is Bursa Malaysia's building. The function of Bursa Malaysia is to provide a stock trading platform as an exchange. The exchange prepares the rules for listing companies and ensures that those rules are complied with. The exchange also implements monitoring of market movements as well as corporate disclosure policies. Bursa Malaysia is a body that regulates individuals and licensed bodies that conduct stock businesses and also conduct clearinghouse services. If you are interested to learn more on Bursa Marketplace, because Bursa, they have another platform called Bursa Marketplace, you can email me your details as I'm in the midst of arranging an online tutorial for the platform with Bursa Malaysia. Okay. Next. Okay, before we proceed as usual, I'd like to make a disclaimer that the stocks to be discussed here are stocks issued by Bursa Malaysia, and anything we share in this session is solely for educational purpose, and we make no recommendations to buy or sell of any stocks mentioned in this session. If you decide to purchase any shares, you do so at your own risk, okay? All right, next. Okay, how to be a how do you have a successful trading elements? First, you have to have your money management, and with that you have to know what is your capital investment to start with and how much are you willing to lose, and you also have to look at your trading psychology. And when you buy the stock, you have to know your appetite type of investor, like we mentioned earlier in our previous seminars. You have to know whether you are short, swing, or long-term trader, and you also have to know where to cut your losses, and you have to know where to set your profit target. Okay, to continue to grow in the stock market, you cannot just rely on one stock. You need to build a resilient portfolio. As for Muslim investors, it's even more important if you build a balanced Sharia compliant portfolio. A balanced Sharia portfolio will help you to reduce unsystematic business risk and help you stand the test of time in the market. Only when you have a balanced portfolio, you go a step further in investing. About 80% of our public listed companies in Bursa Malaysia are Sharia compliant. Therefore, it's easy to build a balanced Sharia compliant portfolio. Okay, this is how we plan our trading. Can we go next? Our trading plan. Okay. You see, our trading plan consists of money management, position sizing, candlestick, trend line, support, resistance, and entry and exit. From here, you have to set your money management. You have to know how much you want to start to invest. Position sizing, with that money, How do you set your buy, where you want to buy, where you want to sell? The candlestick is to determine your entry level, your trend line. It will also help together with the support resistance as our previous classes. And where do we enter and exit a trade? Okay, let's move on to the money management first. Next. Okay. Money management aims to minimize trading losses so that they are manageable. Right over here, our initial capital, right? That means when a trade turns to a loss, it does not prevent the investor from winning other trades. The idea of money management is closely to link to risk management, because when trading, all risks are portended to your money. We'll use this 5,000 over here as our initial capital to invest. Okay, from this 5,000, you only trade 75% of the capital, 3,750. Okay, this is what you should trade, and the balance you should keep it as a buffer. This 25%, you just keep it as a buffer. Right, before you invest, you should set in your mind that how much are you able to accept if you incur any losses. Okay, say for example, we are willing to lose only 5% of your capital. That is 250 ringgit out of 5,000 your capital here. Okay, just for note for beginners, please do not invest more than 3 counters at once. That means do not invest more than 3 stock at once, because it's difficult for you to monitor. All right. Okay, now we keep this figure in mind. This 5,000, 250, and 3,750. Okay, these 3 figures, you just keep this in mind for our calculation. Our next slide. All right, this is next slide, please. Okay, this is position sizing. All right, just look at this table. We have this column, price, description, and the profit and loss. At this left column, so we're gonna have this scenario whereby if the price goes up by 5 cents, down by 2 cents, and down by 0.1 cent. Okay, for example, we buy a stock named Buddy over here, Buddy. Okay, the stock is trading at 25 cents. All right, remember our initial capital amount at money management, we start with 5,000, and 75% of that is 3,750. Right, when we divide by 25 cents, that means our able to buy shares are 15,000 units. Okay, so this is what we are going to work with this amount. Okay, let's control our position sizing plan. Firstly, if Buddy goes up by goes up to 30 cents, okay, the top part here, that's up by 5 cents. Okay, that means you take the 30 cents here times 15,000 units of Buddy equals to 4,500 ringgit. This 4,500, if you minus our purchase price of 3,750, will give us 750, right? So this is our profit for our first trade. This is our plan. We have to plan before we make any purchase. Okay. Okay. So let's. How do we do our stop loss? How do we set our? This is our profit. Okay, 750. How do we set our stop loss? Our stop loss, for example, if we set at 2 cents on the left here, down 0.2 SL. Okay, this SL stands for stop loss. If you set 2 cents as our stop loss, we'll take 25 cents. That means our capital when we buy Buddy 25 cents. 25 cents minus the 2 cents. That gives us 23 cents. So 23 cents times 15,000 units equals to 3,450. That means we'll be having our losses at 300 ringgit here. We cannot afford to lose more than 250 like we calculated earlier. That is the 5% of 5,000, right? Okay, so we have to make our new stop loss. NSL stands for new stop loss. Okay, so this new we have to mark our new stop loss. We can we take the 0.225 here, 25 cents, right? Okay, let's say we bring down to 0.1 here. So 25 cents minus 0.1 cents, that gives us 24 cents. 24 cents times 15,000 units of our shares, that gives us 3,600. 3,600 we minus from our capital, 3,750, that gives us a loss of 150 ringgit. 150 ringgit is our acceptable loss. Remember, our acceptable loss is 5%. 5%. This is less than 5%. So this is how you plan before you enter a trade. Okay, this is just a basic guideline. if you don't go cutting, you don't actually go cutting your losses all the time with all the trades. There might be false breakout as well. So this is just a plan for you. You have to know how to read the market before you suddenly keep on cutting your losses. End up you cut all the losses and you be incurring losses at every trade. Okay, if you use this model, okay, we plan to get where to get into the trade and where to get out. That means if the trade goes wrong, you know where is your level to cut the losses. The potential loss is then calculated, and the amount of capital we can place only a trade in any trade when it work out. That means if you have your capital, then you know where to set. Okay, how much you want to take a profit and how much loss that you can take. Okay, by applying this position sizing method, mentioned in our this example here, you stand to be alive on the losing streak and maximize your profits when it's winning. That means if the price goes up, like we in our previous classes we said that the trend is your friend until it bends, right? So as long as the price is on the uptrend, you can just keep on riding the wave. So when it bends down, then you can, okay, you already mark your stop losses there, then you can start, okay, you know where to mark your losses. That's it. All right, so this is next we go to our candlestick. Remember our candlestick, Monisha Omar. Next please. Monisha Huma, sorry. Okay, this is our candlestick. Candlesticks, I think you guys remember this candlestick, right? Red means down, green means up, right? Candlesticks will form at the top and bottom of the chart. It'll form here, here, and here, because when it's here, then it makes sense how you read the candlestick. Okay, for this one, if red candle is going down, that means that it's on the downtrend. That is dropping here, and when it make a base here, that means when it change the direction from this red candle to green candle, it's going to go up. This is where it goes up. That means it's going down here, then it goes up here. Okay, same goes over here, reverse, the other way around. If the market is on the uptrend, suddenly when it make a base here and it change the direction, so it's going to go down again. That means over here is let's say you bought your shares over here. All right, when it goes up, you just ride on the wave. But when it changes the direction, it makes a reversal. So you have to cut your losses somewhere here, like you determined earlier. Then when you cut your losses short here, when it goes down, you are not making any losses. You are actually making a profit here because you buy here. This is actually easier said than done. This is just on the theory side, right? So this is the candlestick when it drops here and it make a base. So from here, you're not sure where is the direction yet. So you wait for the next candle. Next candle shows it's still red, so it goes keep on going down. You just wait first. You can see your cursor. Okay, can you see now? No. We are still here. Sorry, we are still here at the candlestick at the last year at the last rally, base and rally. Still cannot see? Okay, can see now?
Yep, it's up.
Okay. So on the fourth chart here, okay, if you're at the rally here, the green candle here, okay, you just ride the wave. You just ride the wave. So you already know how much profit you want to make. You just keep on, as long as it's on the uptrend, you can just hold on to your profit. Just write your profit. Okay, these are the basic candlestick that you need to do. You don't really have to memorize the name of the candlestick. You just need to know the pattern of it, how it goes up or down, and where it make where it make the candle. How, okay? And then next slide, can you see? Okay, these are the types of trend. I think this may look familiar to you, right? You saw this earlier in our last webinar. This is a uptrend, downtrend, sideways. Okay, so we're going to see here how do you trade with the trend line strategy. The trend line strategy utilize the trend line as either support or resistance. We can make this as our support or our resistance over here. Simply draw a line connecting two or more highs in a downtrend. That means downtrend, you can just connect the dot here. You just connect here, you'll see, okay, where you should buy, where you should sell. Or two or more lows in an uptrend. Uptrend, you draw a line here. So you can see whether it's going up or it's changing direction. In a strong trend, price will bounce off the trend line and continue to move in the direction of the trend. Therefore, traders should only be looking for entries in the direction of the trend for higher probability to trade. That means if you make a line here, support, okay. Oh, okay, we go to the next slide. Then, okay, you see this support and resistance. Okay, support and resistance. It will follow like our trend line as well, because if you were to draw a line from here, okay, can you see this green mouse? Okay, if you if it's a green candle, if it's downtrend, then you have to draw it this way from top to here. You just draw, that means okay, this is on the downtrend. If it's on the uptrend, you draw from bottom to top here, from the bottom green to the to this green, bottom to bottom. If it's on the downtrend, you draw from the top to top here. Okay, all right. This support and resistance is a powerful pillar in trading. Most strategies have some type of support and resistance analysis built into them. That means this one, if you, let's say if you join me in our Bursa marketplace, then we will see, okay, it's already built in. Then you can see you just click a button, then they will show you this is a support and resistance. Okay, I'm going to actually guiding you to how to draw it manually, so that when you look at the chart, the pre-built, so you know what it means. Okay, if you doesn't know what it means, you doesn't know how to do it manually, then if you look at the chart, they built whatever technology they built for you, you are not going to make any sense to you. You are not going to understand that. Okay, support resistance tends to develop around the key areas that the price has regularly approached or rebound there. For that means support resistance will be around this. This is the price. Okay, you see it touches here, then it bounces here. That means if the price cannot penetrate any higher than the resistance, it will drop back to the support here. See, the price is within this range. So this is our range of our support and resistance. Okay, support and resistance is one of the most widely followed technical analysis techniques in the financial markets. It's simple method to analyze a chart quickly to determine 3 points to enter of interest of a trader. That means from here, support resistance, you can know the direction for market. That means over here, if you look at the last candle here, the green ones, you know that this is on the uptrend because all these are green. All these are big candles and the green candles. That means this is on the uptrend. Whereas if you look at here on the left, red is going down. That means this is a downtrend. So at a glance, you can see a trend of the market, the direction. This is down and up, and then this is uptrend, downtrend. You can see at a glance. Okay, timing to enter the market. Okay, the timing as well. You know where to enter the market. Let's say from here, this is a doji. So after a doji, this is undecisive candle. After this, where do you go? How do you go about? How do you know that the bear is over, the bull is coming? So these are all you have to understand before you make an entry. Okay, and then you also be able to establish the points to exit and entry, exit and enter the market. That means if you say you enter here, then you know you're gonna exit somewhere here because the trend is on the uptrend. So you can buy here and you can buy the support level here and you can exit here because this is the resistance. If the price is still moving up, that means this is going to be another green candle. But you see, it's a reversal. The candle turns red. So you have to know where your cut loss is somewhere here. So you have to cut here. That means when you sell here, you are actually making profit from here to here as well. Remember? That means you are like a swing trader. You just swing from here. Okay, this is normally we look at this at example will be given as a 1 day candle. That means one candle will be formed in a day. All right, so this is resistance over here, and then support also is an area on a chart that has dropped but struggles to break below. That means this one, let's say, is trying to break. See, when it breaks the support here, okay, it breaks down, but when it's trying to move up, it move up, and then it makes another doji here, then it move up again. So when it breaks here, it tries hard to move up again. If it can sustain here, that means it's on the uptrend again. But if it cannot, then it keep on going down and down. And this is, if you break the support, that means you go down again, and this support will be the new resistance for the lowest support level. Okay, that means in theory, support is the price level at which demand, that means the buying power here, is strong enough to prevent the price from declining further. The rationale is this: as the price gets closer and closer to the support, it becomes cheaper in process. That means the price here is lower, here is cheaper. Okay, buyers see a better deal and more likely to buy. That means when it drops here, is an opportunity for buyer to buy. People like us, if you see it's a lower price here, you keep on buying, right? And then sellers become likely to sell. That means over here, seller, if you try to push, buyer are stronger. Buyer are actually pushing the market up. When the seller are pushing down, buyer are pushing up again. That means buyer is in control over here. In this scenario, demands, that means the buyer here will overcome the supply, will overcome the sellers. That means they'll prohibit the price from falling below. You see, when a buyer comes in, you'll push the price up. Okay, but over here, how do we over here, well, the resistance is the area on the chart here, that the price has risen up here, but struggle to break above the resistance level. Resistance is the price at which the supply is the selling power here, the supply, the red one, is strong enough to prevent the price from rising higher. That means they block the price here. The rationale behind this is that as the price goes gets closer and closer to the resistance here, and becomes more expensive. And in the process, the seller are more likely to sell and the buyers become less likely to buy. That means everyone will be taking the profit here. That means when everyone keep on selling, the price will drop. You see the red candle here, the price will drop. That means seller are pressing it down. Okay. In that scenario, supply, that means the sellers here will overcome the demand, the buyers, and that will prohibit the price from going above the resistance. You see, when you buy here, obviously you're going to sell when the price is up, right? So when you start selling, the price goes down, and when the price is down, the buyer say it's cheap, then they keep on buying here. When they buy, then they sell again up here. Okay. All right. So we're going to look at our entry and exit level here. Okay, this is how we enter and exit a trade. Okay, we're going to map out the plan here. So you have done your research, assuming you have done your research on a particular company. Let's say here we take Mr. DIY, for example. So you determine the stock to buy. This is what we're going to buy here, and you consider that this is a stock that is worth to invest in. All right. Okay. How do you determine when to buy here? And okay, just how do we get the best price within a period that you are waiting for? Okay, for example, we start from the left here. This is a 1 day candle, Mr. DIY 1 day candle. That means one candle is formed in a day from 9 to 5. After 5, then the full candle will be formed. Okay, the green over here, if you look at the bottom green, all these are the volumes. This indicates the volume of the particular day. Okay, if it spikes up, that means this is a big volume here. Small, that means a very small volume. All right. So and how do you determine when will be the good time to sell, knowing that the directions may have changed? For example, you buy here, how do you know where you want to sell? How do you look at the chart? Okay, the art of timing your entry and exit in the stock market is what the professionals commonly refer as technical analysis. This is our technical analysis. Previously, we were talking about fundamental analysis, how we look at the price of the market, the ratios and all that. So that is the fundamental. You look at the company analysis, right? Their what do you call the annual report. Okay, so here after you did research, you find out that Mr. DIY is a very strong fundamentally counter, and now you want to enter this company by technical analysis. Okay, technical analysis, in other words, is about reading the historical chart of the stock, the price of the index, along with the information that can be derived from the chart. Okay, how do you see the chart? This is called a naked chart because I didn't put any indicators on the chart. Indicators will be doing about Bollinger Band tomorrow in the chart. Okay, so if you know how to read the chart, then it makes a lot of difference. Okay, see candlestick, like we mentioned earlier, will form here at the bottom and at the top. Okay, you buy at the top and sell at the bottom. Okay, from here, if you look at the see, we start from here. Okay, the green candle here. Okay, on the 2nd of February. All right, you start here, you buy here. This is still on the downtrend. Okay, if it's on the downtrend, you still doesn't know whether it's going to up or it's going to go on the uptrend or downtrend. But the next day it form a doji here. Okay, like a cross here, T. Okay, after this is an undecisive in candlestick, so you have to wait because you are not sure of the direction. Normally after doji, it can either go down or up, but in this case, the next day the candle is up. Okay, you see the next day candle is up, but you're still not sure whether this is a false breakout or the is genuinely going up. And then the next day, that means on the third candle, normally third candle, you can say this is the confirmation candle. You can just make your entry here on this candle. Okay, when you make your entry here, you just ride the wave. You see it's all going all the way up here. And then on this day, when you see when there's a long tail here, that means the price goes down until here, but the buyer pushes up again. Okay, but the body is getting smaller and smaller, so you have to be prepared to sell, because when the big candle here, the big body, that means it's still strong, the buyer is in control, but as the body grows smaller, you have to get ready to exit the market. Okay, and the next day you see it's still green. Okay, but the following day it turns red again. But when it turns red, you still it's still how shall I say, this is still your safe zone, because you buy at a lower price here, right? This is still a safe zone. You have you have done your research, because normally technical analysis, you look at the previous data as well, but we cannot see here. You look at previous data, what is the price before this, so you know you already set your stop losses there, so you just ride on the wave. Okay, because when you're in the market, you can take a profit here, you can sell, no problem, right? The next day when it's down, you can buy again. So this is how you ride on the profit. You see, you can start selling here. When the price goes down, you sell again. Then you think that it's going up, you buy again. But you have to be careful when the candle is like this, when the tail is so long like this, and there's no body here. You see, that indicates that the price is the seller is very strong. The buyer is getting weaker here. So you wait. You see, when the seller is pushing down, you don't know where the direction is, but when it's red, you just don't enter the market, you just wait, because this is the consolidation side. You see, they're consolidating this way. You don't know if you buy, you are making a very minimal profit, or it's taking a long time to move up again. You see, from here is on the 3rd of March, sorry, 25th of February, and then it start moving only on the 26th onwards of March. So you have to wait for a long time. Okay, so this is roughly how you enter and exit the market using technical analysis. All right, so we go to our trading plan again. Actually, having no trade or staying out of the market constitute to a market to a plan as well. If you know, like just now over here, you know that the market is not good, so you're not going to do anything, you just wait. That is your plan as well. Okay, before developing a trading plan, you must understand the principles of money management, like we mentioned earlier, and the risk reward ratio. The risk reward ratio, that means how much is your risk? Your risk is only 1 to 3. That means your profit is 3. That means you can lose 1 cent, but you can win 3 cents. That's how it meant for the risk and reward. Okay, so you have to define an entry strategy, whether the criteria used to take you have to determine where your risk is, and your exit strategy, like mentioned earlier, and you have to remain objective at the end of the trade. Okay, when you buy a stock, you must have 80% of confidence level that the stock will move up based on your study. The trading plan, on the other hand, is only about 20%, and you must provide a mandatory activity for the closing of a trade. That means before you close the trade, you must know when to exit. Okay, emotions can be harmful after a trade, whether losing or winning. You see, feeling of revenge and disappointment can prompt the trader to make unnecessary risk. That means when you buy, you already make profit, you are so happy, you can re-enter again, but when you re-enter again, you might make your mistake. Over here, you see, like when you sell, supposing you already sell here, okay, you're so happy and you enter again, You enter again, you hope to make a profit here, but the market goes down. So when you make a profit, you take a breather, you just relax first. Okay, you look at the market. You don't simply enter immediately without homework. That's what I'm trying to say. Okay, all right. Okay, when you make a wrong judgment, that will constitute a loss. Okay, okay. This is this is going to refer to our initial capital earlier, the 5,000. Remember? Okay, so let's look at this counter. This is SAS body, like we mentioned earlier. I will not be mentioning, we will not be discussing about Bollinger Band today. That's for tomorrow's class. Okay, so this is our trading plan. We are going to comprise, put all this together. Our candlestick, trend, support, resistance, enter, entry and exit. Okay, earlier at our position sizing, we did a calculation on paper, right? Okay, let's now do it on the chart. We will calculate together and I'll ask you a question after this. Okay, so write down, right? For example, okay, look at this chart. This is a case study on illustration only. Again, I would like to stress that the counter mentioned here is only for educational purpose and not a buy call, okay? If in any way that you decide to buy or sell the stocks, you do so at your own risk, right? Okay, and this is for, since this is for educational purpose, I'm not going to use a real-time chart. As you can see, the chart is dated on the 15th. Can you see the date here? Where's the date? Yes, here, 15th of June, 2021. Okay, let's do some calculation. If you could take your calculator or handphone, we'll do this together, okay? This is the pivot point that I mentioned earlier, that this is a preset support and resistance. You just press the you want support resistance, they will calculate this for you. Let's say this is our pivot point. This is where we're going to buy the shares, okay? At 0.233 cents, okay? R1, R2, and R3 is resistance 1, resistance 2, and resistance 3, all right? R1 is at 262, 0.262, R2 is at 0.283, and resistance 3 is at 0.312. Support 1 is at 0.212, support 2 is at 0.183, and support 3 is at 0.162. All right, let's buy SAS body 15,000 units at 23 cents. We buy here. Right, we buy SAS body here 0.233 cents times 15,000. So our capital will be used at 3,495 ringgit, right? 3,495. Okay, remember this? After doing some technical analysis on this counter, we found that our resistance level, this R1, so we decided to sell at this price 0.262 at all our 15,000 we sell here. 15,000 units, we sell at 0.262. All right. So that gives us 3,940 minus our capital. So our profit is 435. Okay. Yeah. Did everyone get the same profit here? 435. Correct. Okay. All right. So we are satisfied with our profit here, 400. Okay. Let's say if the market changed direction and SAS body looks like it's going down, right? Remember our technical analysis that we did earlier for resistance? We did here, right? So we should do the same for our support as well. So the support now, we know that the price dropped to 0. If the price dropped to 0.221 cents here, that's our stop loss. We're going to sell here, our first stop loss, to minimize the stop loss level, right? Okay, I have to stress here that before you buy, you should have an idea of how much risk that you're taking, meaning how much losses that we are willing to take. Like earlier, we calculated that 5%, right? 5%. So if we hit our stop loss here, level at 21 cents here, if you sell at this price, over here, you see, if you sell at this price, our loss is about 315 ringgit if you sell here. If you sell 0.212 here times 15,000, so we get 3,180 minus our capital, so it gives us a loss of 350 ringgit. This is more than what we are willing to lose, right? Our willing to lose is only about 5%, that means about 250. So you have to make your new stop loss. Remember, new stop loss, too much. Okay, we should make about, so you have to change your stop loss. You have to okay, you have to have another stop loss. Okay, this is your new stop loss. That means although this is a support level that is here, you have to make your own support level. Okay, So from the very beginning, we should change our stop to a new stop loss. So instead of here, you should change it to somewhere here. All right. Okay. So you can look at it this way. Okay. If you just put your stop loss slightly lower than our purchase price, this is our purchase price. Just put slightly lower here. Okay, for technical analysis, there are certain criteria to set a stop loss. For this learning session, we just pick one level here. We just pick here. Our stop loss is here. This candle, okay, at the body, below body here, this is our stop loss. Okay, let's say over here, the level is at, say about 22 cents here. Okay, that gives us 22 cents times 15,000. So our losses is about we get 3,300, okay, minus the capital. So our loss is about 195 ringgit. So this is our acceptable loss, right? Okay, can you all follow me now? Can you give a thumbs up? Okay, all right. This is just a basic calculation which does not involve any brokerage. Okay, this is just calculation without brokerage. For actual trading, there will be slight difference in this from this illustration. All right, at least you just get the idea here. Okay, you see the risk associated with investments are in equity itself, which is the share price here. The share price you can control when you buy and sell. So you can that is the risk that you can control. But you look at the market, which is if you look at the market here, you can control the market price. You can control your enter and exit price, but you cannot control the market here. That means the market will just move on. Okay, for liquidity risk, it's easier to liquidate the shares like bursa shares. When you sell the shares on the third day, that means the T+2, you receive the payment in your bank account. Okay, operational risk is now less thanks to the digital technology. For instance, if you transfer a share manually, you have to fill out the blue form, the form 14A, to submit to a broker. And if you submit late, the transfer can only be executed the next day. But with Bursa Anywhere now online, you can transfer shares throughout just through your handphone. Okay, remember this. I just want to remind you that you should be responsible of the shares that you invested. Always check the Sharia status before hitting the buy button to avoid buying into a Sharia non-compliant shares that could lead to Sharia non-compliant risk. Okay, I got one question here. Okay, let's say if you sell at here 0.312, okay, what's your profit here? Anyone got the answer? If you sell here, your 15,000 here, you sell here 0.312. What's your profit? Okay. No answer? No, you times this. 0.312, you times 15,000. So your profit will be correct. Correct. Thank you. Your profit is you'll be getting a profit of 1,185. Okay, so this is the basic idea of how you can buy and sell and how you do your stop losses. Thank you everyone for the answer. Correct. Okay. Okay, like I mentioned earlier, this is your buy price, your entry price. When the price is on the uptrend, you just ride on the trend. You just ride the trend, but you should have your stop loss and your target profit. Okay, before you end, this is your trading plan. This is where you're going to take a profit. So when the price moves further up, that means this is your sustenance. You just let it go. Okay, you just go to the next counter. You have to do your homework. You have to know your entry price here. You have to know your entry price. Okay, and you have to take profit when the price move up and cut when the prices go down. That means you have to know stock market doesn't go up all the while. You see, in a healthy market, you go up and down like a wave, like a tide in the wave, right? Okay. Over here, this is our emotion here. Okay. Okay. Like just now, our counter, we are going to use the subsidy here as our example price. All right. You see, investors' emotions are play out with a similar rise to peak before the declining. It go up again up first, then it will decline here before a recovery. Actually, they have these 14 stages: optimism, excitement, thrill, euphoria, anxiety, denial, fear, desperation, panic, capitalization, dependency, and the point of maximum financial opportunity, depression here. Okay, and hope here, relief, and optimism. All right. Okay, let's say you buy your sus buddy just now from here, optimism, 23 cents. All right. Okay, let's imagine you just buy a stock here, and when it goes up, then you feel your excitement here. Okay, this is where your tree, oh, it's going up to 25 cents. So when it reaches here, you sell. Okay, that is your plan. You have to know where to sell. Okay, but if you don't sell, this is what's going to happen. Okay, you see, the cycle usually starts here, optimism. All right, it starts here, and then people will expect return from their risk of investing here. Okay, when these expectations are met, you get excited as you see the possibility of a bit of higher returns here. All right, further your excitement becomes thrill as your return expectation exceeded. That means you thought it's going to be here 25 cents, but it exceeded, it went up higher, the price. Okay, and then at the top of the market cycle, you experience here euphoria. Wow, it has gone up more than what I expected. Okay, this is a point of the maximum financial risk. Okay, if you don't take the profit here, you go down again. Okay, let's imagine this. Your friend asks you to buy a stock. Okay, you'll probably be thinking, hey, look at the bullish candle on the chart. The chart earlier, remember the green candles? Okay, it has gone up so many days in a row. This is a big move. Without knowing, you just rely on what your friend tell you. Okay, you just say, let me quickly place an order now before I miss out even more. That means here, when your friend was telling you the price is over here, all right, you without knowing anything, just take your friend's advice. You just enter here, okay? Because you thought that you might even miss out even more because you might be afraid that the price might go up further. Okay, this is where we call FOMO, F-O-M-O. In stock market, we call FOMO. It stands for fear of missing out. Okay, and what do? You hit the buy button, and of course the next thing you know, this is what happened. You see, now here comes the critical part. What if the price drop to 30%? Do you sell, hold, or buy even more? You don't know because you're trading based on the opinion of someone else. Okay, you might be wondering, well, I'll just ask my friend for an update on the stock. Okay, and he'll tell you he has sold off his position for a small loss, or he doesn't reply to you. You see, either way you lose. That's why I say you always have to do your own homework. Okay, then over here the price drop, keep on dropping to 21, 20, 19 here. Okay, but when the price are in the capitulation stage here, okay, at this stage here refers to a phenomenon where investors liquidate their positions during the periods of extended decline in a stock price for the fear of incurring bigger losses. Okay, it's like a panic selling. When you make panic decisions, you don't think anymore, and with the huge losses from here to here, you'll soon be in the dependency stage here, whereby you're in low spirit from the losses. That means whatever people say, you don't care. You're going to dispose the share because your loss is so huge here, from 26 cents to 16 cents here. So you are thinking that, oh, it might drop even lower, so I better sell here. But when you sell here, you see, for opportunities, they will buy here. You already clear a position. You make a huge loss here. Okay, this is where the opportunities wait here. Okay, they will buy here at the lower price here. So just remember, yeah, you never trade based on the opinion of others. They won't tell you how long they plan to hold the trade, when to cut the losses here, when to take the profit. This is where you have to know how to mitigate your risk. This is where your plan comes in, all right? When you buy here, you know you need to sell here. This is your cut loss here. Remember that we calculated earlier? Okay, you just ignore the noise. Believe in yourself. So here's what you have learned from the above scenario here. Okay, don't chase the market. If you chase the market from here, 23 cents to 26 cents here, then the market, when the market is about to make a pullback or a complete reversal here, you wouldn't know. That's why you have to do your homework. You have to know what is the highest before for technical analysis, that you have to refer to the previous candles. Okay, previous, then you know what is the support earlier, what is support and the resistance. So you know where is your enter and exit level. Okay, you have to adjust your position size relative to the distance of stop loss. So your position, okay, where you want to stop it here, your stop loss. Where you buy here, your stop loss is somewhere here 22 cents. Okay, so this way you can always raise the same dollar amount on this trade. That means, you know, okay, you're going to lose 5%, $100, $100 or 100 ringgit. That is my maximum loss. I'm not willing to lose more than that. Okay, you don't average into losers. It's best to take loss when it's small and move on to the next trade. Okay, you have to cut your loss when the market has proven you wrong without hesitation. Normally, this is not an easy decision to cut losses, but with knowledge and experience, you just know where to take such action. Okay, and never trade out of boredom, because you see, or itchy finger syndrome, they call it itchy finger syndrome. You just simply have to enter the trade. For some, if they just don't do that, you might be surprised that there are people like that. You see, this is a real case. I have a client who will buy and sell at the same price. When I asked her, why do you do that? She said, it seems to her that at first she thought that the price is dropping. So okay lah, I sell first. Right, when I asked her, why did you do that? She said, I feel like it's going down, but when I look at the candle again, that's why I saw like, oh, it's going up again. So she buy and sell at the same price here. Okay, suddenly she heard rumors that, oh, this is not going up anymore. Excuse me. And it's going, bless you. And decided to cut the losses short. Okay. And okay, this is for rumors. When you heard the rumors, okay, remember in stocks, you just don't jump like a monkey, we call it. Don't jump from one stock to another because of the rumors. You just do your own homework. When the price sunken and it make even worse over here, and you don't have an exit plan, when the stock price nose dive over here, then you'll be a depressed mood. You'll be in huge depression. Okay, most investors are emotional that drives the stock price up and down, which betrays the true value. You have to know what's the value of the stock before you buy. Okay, you just always have to remember, investing is picking good companies at good prices and waiting for the price to move up. Okay, you hold them as long as they remain good companies and sell them when the better comes off. All right, this is what I mentioned by don't jump like a monkey. Okay, if you keep on jumping, then you wouldn't know which branch you're gonna hold, or you might just fall to the ground. Okay, you just don't follow others blindly, or it will result in greater losses in your portfolio. All right, your success as a trader has nothing to do with your educational background. All right, if you don't follow the rules, you end up blowing up all your entire trading account. Trading is like learning a new skill. You must be ready to put in time and effort. I'm not saying that it's easy, but this is not hard as well. Okay, always stay in control when making investment decision. You don't listen to others. Don't be afraid to recognize which phase of the cycle you are in, the emotional cycle just now, so that you can understand how your feelings, and you make a better judgment to dictate what is your choice, where you are now. Okay, whether you should cut your losses or should hold on to it. Okay, don't be afraid. Yeah, don't be afraid to do that, to know where you are there. And I think that's about it. That brings us to the end, and I'd like to thank you for your time and attention. Thank you, everyone. Back to you again, Fatin.
All right,
Or if
thank
you have
you,
any
Datin.
questions. Okay.
Yes, so next we'd like to open the floor if there are any questions among our participants today. You can either switch on your mic or put in the chat box. And I think there's a few questions in the chat box. Have you answered those, Datin?
Can you just read out to me?
All right, we have a question from MAS.
Okay.
How to balance between riding the uptrend with taking profit of initial trading plan?
That one actually, you have to dive more into the stock market, because you have to look at the technical analysis. You have to mark your support level, entry level, and how do you balance? It depends on your capital as well. How big is your capital you want to invest, and how do you balance the stock? Like we mentioned in our previous webinars, the sectors, you have to enter in the different sectors. Okay.
All right. All right. I hope that answers your question, MS. All right. So next we have from Rafiu.
Yes.
Why? I think this one is for the emotion slide.
Okay. we
Why
go
is
back.
it that, yeah, why
Uh,
why is it that when the price is 0.15,
uh-huh.
okay, yeah, the emotion, yeah, this one.
Okay.
Right. Why is it that when this price is 0.15,
Uh-huh.
it is called the point of maximum financial opportunity? Are you
Okay.
talking from the angle of buyer?
Yes, yes, correct. This is at the angle of the buyer. That means the seller the seller, once you don't have your trading plan, you don't know what to do, you'll be selling here. When you sell here, the buyers, they know this of this stock, they know that this is the stock is valued this much. This is the fair value of the stocks. So they will pick up the stocks here. Okay.
Okay. All right. So I hope that answers what's called refuse question. It's very clear. All right.
Okay.
So next we have from Jovitania.
Yes, Jovi.
All right.
Hi.
So when the counter is in a downtrend,
Uh-huh.
to be on the safe side, should the entry point be when there is an indication of green candle, but fundamentally there are issues. For example, what's it, serba dynamic case. Sorry.
Okay. That one I cannot comment on air because they're having the issue is still going on, and I cannot comment on that. But in general cases, if you find that the stock is fundamentally strong and you find that it's undervalued and you have the means to buy, then it's time for you to pick up the counter. That is for general. I'm not referring to one counter. Okay, JV?
All right. So she
Yeah.
nodded.
Yes.
She understood.
Yes.
All right. So next, from NHK, the support and resistance indicator, are these called calculated? Are these calculated by the system, or we can calculate? We can actually set them based on our own preference.
Okay. For your own preference, you do it your own on your own first. But if you look at the technical analysis, if you look at the wait, if I can, that one's for tomorrow class. Okay. Okay. For technical analysis, the history repeats itself. That means you look at the previous candle, you draw a line from there, from the previous candle to current candle, where it stands. So you have your range there, the support and resistance level.
Okay, so for more info, you can join us tomorrow too.
Tomorrow.
Yeah. All right, next from A. Can we correctly apply similar concept learned here in Forex online trading too?
Forex is slightly different. Actually, Forex over here, we can only long. That means we can only buy, then we sell. But in Forex, you can do both ways, sell and buy. But there are a lot of issue on that. Some says it's not Sharia compliant, so I'm not going to comment much on that. But the way of doing it for technical analysis is the same.
Okay, so we have two more questions.
Okay.
One from Ananda.
Okay.
How many bounds the candle needs in order to be considered strong support or resistance?
Okay, normally two or more bounces. When it goes to resistance, okay, if it touches once, it doesn't mean anything yet. Second, it's going to be, right? Confirmation, third, okay. After the second one, normally the third one, it will bounce up, it will penetrate the line. That means if for resistance, it will penetrate the resistance, that means price is going up. But support as well. If it touches more than 2 times, that will break down for the support level.
Yeah. Okay, so last one from Yusanif.
Okay.
What is the suggested timeline to observe the trend in the chart? Should we look at daily, monthly, yearly?
Okay, this is where our what our we should know our type of traders. Okay, if you are a long-term investor or short-term trader or a swing trader, you see, if you are a short-term trader, first you have to know of the long-term. Okay, let's look at that one. Is also for tomorrow actually. Okay, let's look at this chart again. If you look at this chart, can we go back? one more. Okay, if you look at this chart, okay, this is the daily chart. Okay, to be able to determine, you have to look at the big chart first. That means you have to look at the 1 day candle, and then you narrow down. Okay, if you're a short-term investor, from 1 day, you change here. You change your daily candle to half an hour or 5 minutes. Then you look at, because you want to enter the short period after, you want to enter now, right? So when you go from a bigger time frame, you look at the market. Okay, if this is, let's say you want to enter here, this is the big the 1 day candle, but over here you want to enter now, right? You know that this is on the uptrend. You look at a smaller candle, you go to the half an hour candle. Okay, you go to half an hour candle, then from there the candle looks differently from the long term. So from the short term candle, small time frame, you know where your entry is. First, you look at the big candle here, big time frame, and then you narrow down to a smaller time frame. Then you determine your exit and entry here.
Okay. Yeah. So you send if you need to join tomorrow too.
Yes,
To
definitely.
learn more. Yes. Right. So okay, we have one more. What's
Okay.
the extent of speculation or lack of underlying knowledge on TA, FA for Muslim traders to not fall into excessive risk-taking state?
Okay, you don't speculate, because when you speculate, it becomes non-Sharia compliant. Okay, that's why I say it falls back onto the fundamental and your homework. You have to know where to buy. Okay, when you buy, you make your research. You're not simply throwing a darts. Okay, you actually know what you're doing. It makes sense to you. You just eliminate the noise. You just don't listen to the rumors. Yes, you have to listen to the news as well, but you have to know. Okay, you have to know when you enter here, this is the purpose of you to sell. This is your trading plan. That means you just have your plan. That plan constitute to a you can say like your Sharia compliant intention. You don't have, that means, why do you, in the first place, why do you enter the market? To make money, right? You want the capital gain. Okay, if you want the capital gain, this is your selling point here. You have to know, okay, if it goes 10 cents, I want to sell, because you refer to this candle over here. Okay, the history repeats itself. It goes up here. Before it goes up, you know, okay, it has gone up here, right? It will go up again here. So this is, you mark here, this is your support level here. Okay, if it breaks up, then okay, it breaks the resistance. So you have to know what you do. You cannot just say okay, you just simply trade without knowing anything, because when you lose your money, your hard-earned money, then you say that the market is not on your side. Okay. Yeah.
All right. Datin, there's 2 more questions.
Okay.
You're okay with that?
Yeah, sure.
Okay. So from Ananda,
Okay.
if there is a strong support, resistance, and pivot, which one shall we go?
Support, resistance, and pivot. Okay. Pivot normally is the middle point of where you should enter the market. And you also have to know your support and resistance there. Okay. This is difficult. Okay, I'll give you, let's go back to this, because answering like this, you cannot see what I meant. Okay, let's go back to this. Next. Can we move to the next? Can we move to the next slides? Lagi. Next. Okay, this one. Yes, this one. Okay. Okay, this is the support and resistance. Okay. You see, this is the pivot point. This is I'm using this. This is a chart nexus. This is 1 day delay day chart. All right. This is the previous day's chart. So if you want to enter the market today, this is just for your guideline. Okay. If you look at the pivot here, this is, let's say today is this is on the 15th, right? Let's say we want to enter the market today on the 16th. So you can just look at this as a reference. Okay, you know that this is the predetermined support and resistance level here. That means what they did here was this support and resistance. That means it has been the price has been to this range previously. So this is what they're showing us, that this price was earlier on at the same level here. So if you want to determine your own, you can do so. That means this is the previous candle. You look at your current candle and you can draw the support resistance there. Is that the question?
Yeah.
You see, this is the trend, bull and the bear. You just write, this is on the, okay, let me show you this one again. Okay, this is a candlestick trend. Look at this candlestick, right? The black one is the green candlestick. The black is the red candlestick. The trend, just follow the trend. This is a trend, uptrend. The bull is here, and this is downtrend. The bear is here. Okay, your support resistance is here. Support and resistance, entry and exit. Where you want to enter at the pivot point, or you can, because your entry level here is actually depending on your current candle. This is the previous candle, the previous day's candle. You should look at the current candle that you want to enter, like your 5 minutes time frame or your half an hour time frame. From there you can spot, not to just spot, you can actually look at it clearly. Where is the entry level?
Okay.
Yes, correct, Mas. We have to check the index to gauge the investor sentiment before buying, because index will determine the trend. If it's on the uptrend, then you should buy the counters on the uptrend. You don't buy when it's on the downtrend, because if it's on the downtrend, how low can it go? Because in stock market, there's no highest and there's no lowest. There's only higher and the lower. Okay. All right. Any more?
Okay. Datin A is requesting for you to comment on a bit on TD, Tom the Mark charting method. Should we keep that for tomorrow or?
I think we just stick to our syllabus here first. Because that one, because for those people who are not familiar with technical analysis, that will be too overwhelming.
I see.
So we just take a baby step here. If you want to know more, then you have to actually spend a lot of time, because technical analysis, what I'm telling you, this is just a tip of an iceberg. There's a lot more to it, and depends on how whatever types of trading that you want to do. Okay.
Yep. Okay.
All right.
All right. So
tomorrow,
I think that should be it for the questions.
Yeah.
But before we end our sessions today,
Fatin, just another thing. Like I mentioned earlier, those of you who wanted to learn more on Bursa Marketplace, you can email me your details. Because this Sunday we're going to have one session. If there are a lot of you, then we can do another session, special session for you guys. Because in Bursa Marketplace, you can look at the top 10 counters, the top 10 investors for certain counters, and in the pie chart is there, and they are already the indicators are there from the technical analysis, whether you should buy or sell the stocks. But that's only for Bursa stocks. If anyone is interested, then you can just email me your details. Thank you. My email is Remazia and SJ. Yes, correct there at gmail.com. Correct.
All right. So everyone also email her.
Yeah. Okay.
Okay. So, all right. So before we end our session today, we'd appreciate for everyone to switch on your camera for a quick photo with Datin. So it won't take long. Just and if we can switch off the share screen, please.
And can you stop share?
All right. While we're waiting for the others to switch on the camera, before earlier in the chat box, we have our brother Azrul shared what's called feedback form, a link to our feedback form. So we'd appreciate for all to fill in the form to help us improvise our future events. All right, so I think it would be convenient for us to share the link again. All right, so Hisham, you're taking the photo, right?
Wait for Hanif to stop share. Hanif, can you stop share
All right.
the screen? Right. Thank
Okay.
you. Okay. Everyone smile. 1, 2, 3. Okay, please wait. Okay, one more time. 1, 2, 3. Okay, thank you, everyone.
Thank you.
All right, and with that, I hope that this session is a fruitful one for all, inshallah. So for more questions, Datin will be with us again tomorrow at the same time today, and you can share with us your questions then. All right, so with that, we will end our session today with Tasbih, Kafara, and Surah Al-As. All right, thank you again for joining us. Assalamualaikum, and have a pleasant day ahead, inshallah. Thank you, Datin.
Thank you.
Thank you.
Bye.
Thank you, Datin.
Thank
Thank you, Tin. Thank you, everyone.
Thank you, everyone.